Good evening, this is Rodney with the Triton Wave update for Wednesday, August 15th, 2012. Okay, let's jump in here. The S&P futures, all the tails that have been going up to the upside. This is a daily chart on the left-hand side. All the tails that have been going, that are on the bottom, heading up, 1, 2, 3, 4 days. Finally, we had a tail to the upside that's heading down. And right at resistance, it did most of this overnight at 109, 109.50, 109.75. And then surprise, surprise, it did a turnaround at about 6:30 to 7 o'clock this morning Central Time. And here after hours, it's continuing to do the same thing. Most of it fell apart at the end of the day. So if you look over on the right on a 21-minute chart, this hash mark represents the beginning of the day. It started to the high side with a gap open, filled the gap, went about 50% or more, almost to the top, and then sold off. It filled the gap again, then went 50%, and then double the gap on the downside. So this all started to fall apart right at about 145. So let's take a look at a 1597 chart here. If you're a day trader on the ES, there's two ways to play this. You can either take this and using the longer term waves, this is again the beginning of the day at 8:30. This is assuming that you're not overnight. And just take the first clean break below zero, which is wave number 3, or actually you can go back to wave number 2. So this happens right at the 55 exponential moving average of the tick chart of 1597. This happens at about 1405 on the ES, at about 8:34 this morning. Now, if you follow this all the way down, then the rule of thumb is that whatever wave you get in, you get out on the next one. So you would be getting out right about here. You'd be losing this portion here, but you never know if it's going to go a lot lower, so you hang on for that. Then if you wanted to get back in again, you could either get back in the short one or use the same long one right here. And you would have been good for the rest of the day. Right now, after hours is down 175. We're at 6:45 Central Time in the evening. The other way you could play it is using the longer term waves like T3. So you wait a little bit longer to get in, and then you just keep it as long as that same wave is below zero. So there's a couple different ways of doing it. If you looked at it all depends on what your risk tolerance is. This is the 987 chart. So on the 987, below zero happens right about the same spot. Actually, a little bit sooner at 1406, and 2 minutes earlier. So if you're using the smaller time frame chart, then you could also use T4 to get in and stay in all the way through the end of the day, or you could play it. So you would be short here, and then play the short wave against the next shorter wave. You'd be out here, short again here, and out here. Now the reason you can, with really short-term waves like this and short tick charts or small tick charts, this isn't really small. I mean, some people use 144s. My point is, that the smaller the tick that you use, the less time you want to stay in it. So you want to go for the short time frame, smaller amount of points. So this you're riding out for longer periods of time, expecting more. For 1407, 14.2. If you got in back here, it would be 14.04 down to 13.97. But if you looked at something that was like a 377 tick chart, let's see how that looks. Let's see how that comes out. Okay, so going back to the, I'm looking at this chart, and that's not going to work at all. Let's try the 610. Very sketchy, very jumpy. Okay, so the two that you want, those you have to try different tick charts to see which one the waves suit best for that particular index, stock, option, or whatever you're using. So the smallest one you want to use on the ES is 987 for today. Now, when it gets really busy, trading a billion shares, you'll probably stick with the 1597. Let's take a look at what happened with the vol spread. Even when let me see here, at the beginning of the day, where are we? 1, 2, 3. Okay, we hit a plus 1,000 tick reading. So we actually had 3 or 4 or 5. We had 1 plus 1,000 and 4 minus 1,000. So it was a little more active today. Actually, the New York Stock Exchange total volume was about 540 million, which is about 80 million more than yesterday. So things are picking up. But even with the 1,000 tick reading here, and you can look at the cursor on the right-hand chart on the vol spread, as I scan over this bar over here, the candle on the 3-minute tick chart. Even when this was going up, there is not a big move all the way across. As the plus 1,000 reading happens, this opens up, but it doesn't continue. It goes sideways. A little bit up, back down, sideways, a little bit up, and then about 2 o'clock, whatever sell programs came in, this went from plus 300 to on the S&P to minus 400 before it started recovering. So you'll notice on the tick charts that after that initial burst, everything the entire day was contained under plus 600. And most of it was boxed in plus 600, minus 600 until it started loosening up a little bit around noontime. And then, of course, after 2 o'clock, it just got annihilated. And even, well, we'll take a look at Apple afterwards, but so let's take a look at Apple, since we just mentioned it. Apple did a spike up to 639, and then when the market started falling apart, this is on the tick. This is a 1597 tick chart on Apple, which I like to use because it's very, very active. This really started to come apart right around 10:30 this morning, but it really wasn't a put opportunity until about noontime, and it just came down, and actually came down to slightly less than break even. It actually went from plus 8 or 9 to minus 50 cents, and then it came back a little bit at the close. But Apple is showing signs of, actually Apple doesn't look too bad. It might come down a little bit more. After hours, Apple's up half a point. But I like the fact that it spiked up, came back down, left a huge tail on it. So we'll see where that goes. The 1597 is shown a little weakness here, probably follow through into tomorrow morning. Don't be surprised if this comes down to this level from which it took off on August 10th. Goldman Sachs has spent a lot of time trying to get through all this congestion. And if you recall what I said, if it gets above this, if it breaks through this congestion, even though all the waves were either partially or wholly above zero, the indication is a breakout to the upside comes back and kisses it goodbye on the way up. What happened was that it was up substantially this morning and basically just puked it all in right from the beginning of the day all the way into the close. So it finished, it was up 2 or 3, it was up 2.5 points, and it ended up down 35 cents. So this, in order for this to be a buy, to my way of thinking, this still has to break the 144 exponential moving average and close cleanly above it. And then it's a buy to the next level, which is 108. In the meantime, the 21 is hovering at or near zero. So that's not really an indicator yet until T1 or T1 goes down. Actually, T2 and T3 is going down, so this may be a short-term sell down to, I see that as a short-term sell down to 100. My target on Goldman Sachs is 100. Okay, regarding Baidu, Baidu got through all this congestion, went a straight top across for 5-6 trading days, tried to jump up beyond that, early morning trading, and just gave it all up. Also, on the 21-minute, the T4 that crossed above on July 19th has now crossed completely below. So my target on Baidu is 124. And it looks like it's all T1, 2, 3, and 4 is down. T5 is about to go below zero, but the moves happen in the medium waves. Sometimes in the big, sometimes in the small ones, mostly in the medium ones. Okay, let's look at Netflix. If you remember, I said I did not like this on the downside because it was so far overextended, but it was a short if it came up to 60. If it came up to 61, which I never thought was going to happen. And here it is. Somebody put out a buy recommendation, which is kind of a rare occurrence, so there may be a little something going on there. They put out a buy recommendation in the middle of the day, like at 1 o'clock, and everybody thought that it was that really is a buy just because somebody said it was a buy. Shot up 3 points, so that's like a 3 or 4% move in 21 minutes, which is crazy. At some point, if this comes up a little bit more to 68, 60, I think my original target was 68, 69. If it gets there, then that would be a short. It would have to clean out on the left-hand chart on the daily, come up to where this platform was up here, and match the 55 period exponential moving average on the daily. That to me would be a great short. And that's just about a 50% retracement from this top to bottom. Well, let's see exactly where it is. That lines up perfectly with a 50% retracement. So that would be that would be a good play. I would not touch this on the upside. It does its own thing. Doesn't matter whether the market's moving up or down. Netflix just always does its own thing. MasterCard, moving up with the short-term waves. All the short-term waves, half of wave 1 stayed up, T1 stayed up, T2, everything followed through. But the congestion on the daily that I've been talking about, it's just like mired in all this. I know it was at one point I think it was it was up 245, and another 5 points would be 745. So it gave this up with the market decline, and it gave it up partially because it's been congested. It's congested all through all this exponential moving averages. And as I've been pointing out in numerous sessions, this is a waiting game on what this is going to do on T5, and this just keeps climbing, just keeps getting lower and lower. It's not there yet. It's 0.61. I think when we started these videos, it was like 14. And MasterCard is a few points this way, a few points that way. I think he played a tick chart. You might be able to catch some of it. But I'm looking at the big move on this. And I think the next big move on this, according to the Triton waves on the daily chart on MasterCard, the next big move is down. Okay, I've talked on a number of occasions about GLD. The fact that the waves on T1, T2 are above zero. The main one on T5 is still above zero. Everything else is moving toward the zero line. And that's all fine and dandy except for one thing. The stock isn't moving. It went into congestion here, came back down again, moved back into congestion, and moved back down again. So the plays here, if you notice this area from July 24th to the present day is on the 21-minute chart. And these are nice wave patterns. It goes up here. This happens to be congestion on the top of the daily chart, and on the right-hand chart, this is where the wave goes under zero on T1, and then T2 here. Then it recovers. T1 goes above zero. You can play that all the way until either T1 goes below zero or T2 goes below zero. And that becomes a sell again, which is right in line with what's happening with the congestion, and one chart is reading the other, even though the left-hand chart is a daily and the right-hand chart is a 21. So looking at Google, Google had a nice run today. It was up 8.5 points, and at one point it was up 12.5, 13 points, which I thought it was already lofty when it got to 635, and now it's 668. So we are I think we're in brand new territory here. Let me put on a weekly on this and see where it is. Okay, so the all-time high on Google is 751. November 2007. So we're at this is a weekly chart that's bumping up against resistance here. It's not good. Hang on one second. All right, so that's an upward trend line going back quite a few months. Actually, all the way back to May of 2008. I'd be really surprised if I can get through there. Let's go back to the daily chart. So that's the resistance. We're right at resistance for Google. As far as the 21-minute goes, it took off 2 days ago, and it's still going up. The T1 took off at the beginning of August 13th. Good for 40 points. However, on the daily, The daily T1 took off way back at 590, 579. So that's almost made 100 points on this run since T1 on the daily took off. So I would wait. If you're playing this on the long side, it's kind of exhausted on the long side. Wait until it backs and fills, maybe comes down 20, 30 points to 640 if you want to try to get on the upside. But right now I think the best plays for this are waiting for T1 to roll over and coming back under zero, and then wait for a put play. Or just wait. If you don't like puts or shorting, wait till it comes down, comes back up again, loops back up over zero, and make sure that T5 is still above zero and you'll be fine. So, guess what happened today? The VIX decided to take off after hovering near 4-year lows. It started to take off, and I think it finished near, it was actually 20 cents higher, but it was up 115, which is a huge move for the VIX. Now, it happened so quickly that the 21-minute didn't actually go above zero until mid-morning. But if you're playing the VIX, that was a play right there. But the real play on VIX is if the waves roll into each other. So if T1 rolls into T2, into T3, and it looks like it's starting to do it, then we could have a snapback, catch you by surprise rally in the VIX up to 1634, which I actually thought was going to happen back here on the 7th. And we got cooperation from T1, T2, but T3 never made it. So this had already rolled over. T1 had already rolled over by the time T2 was still below zero. That's why that didn't work. But it's trading, so you keep doing it. When they work out, it's absolutely beautiful. So this is rolling into this, is rolling into this. And also, let me see here. The 8 has crossed the 21, and the 8 has also crossed the 50. So that's a good lead in. That's a distinct possibility. This could come up here, and we could have, if this goes up, market comes down. And all those shorts will be in play. That's all I have for tonight. Good luck trading, and I will see you at the next updates. Enjoy your evening.